Hello, everybody. My name is Bennett Tchaikovsky. Accounting professor. Hope you're doing well today. This is the Intermediate Accounting Wiley brief exercise walkthrough for 1912 and 1812. I like 1812. Note, same question, different year. The question used in this presentation is copyright 2019, 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2023 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of myself, not my employers or Wiley. My employers are the South Orange County Community College District and Irvine Valley College. Okay. So let's just go ahead and take a look at this exercise really quickly. So the reason why I'm going through and doing this particular exercise is I want to thank my viewer and hopefully subscriber for basically putting up this question. Like, basically you need a good solution, a brief exercise 1912. So let's take a look at exercise 1912. So Road Inc. incurred a net operating loss of $500,000 in 2025. The tax rate for all years is 20%. Prepare the journal entries to record the benefits of the loss carry forward. Road expects to return to profitability in 2026. So you're seeing something that's very important here. And the very important thing here is that you have a situation where we are planning on going through and going to be able to use the benefit. And that's a real important assumption based on management. So essentially, we know that this is basically a net operating loss carry forward. Basically, the value of this, we have net operating loss is 500,000 at 20%. So my tax benefit is going to be basically, because I can carry forward this loss, basically over here, this tax benefit is going to be roughly $100,000, right? So as this is a future tax benefit, what my gut reaction to go through and do is, well, it's going to give me value. So I'm going to go ahead and debit deferred tax asset. This is going to be for 100,000. Now, here's an interesting question. What do we credit? And what you're going to see here really quickly is that for this particular topic, or 123120, what you're going to see is actually a conflict of answers. Okay, so I'm going to show you something really quickly. Just give me a moment. So here's Wiley's solution to this. And again, this belongs to Wiley, but Wiley is basically going through and saying debiting deferred tax asset. I completely agree with that. And they're going through and crediting income tax expense or a loss carry forward. This is what I have an issue with. And it's mainly, and I'll explain why momentarily, but we really don't have an income tax expense basically for this coming year because we're at a loss. So to show this as a reduction of expense, I don't know if that makes a lot of sense, but just give me a moment. And so now we're going to come back over here. Now, when I've taught intermediate accounting part 2 once. I taught that in the spring of 2022, and boy, oh boy, was that a lot of fun. It's a crazy class to teach just because it contains a lot of the material. I spent a lot of time going through and preparing for that class, just as you would for any new class that you're going to go through and teach. I've taught the first semester of intermediate forever, but this was the first time I was going through and doing it. And boy, oh boy, was it a lot of work. Now, what I'm going to show you here, though, right now is that this is how, when I went through and taught deferred income taxes or income taxes, I went through and I used Becker, and I also used Becker, or I would have used Roger, right? Both, by the way, too, Roger just got Peter Olinto, who's an amazing instructor. So Peter Olinto, Roger. And so what we're looking at now over here is that when I taught deferred income taxes, I went through and I used Becker. And so as we go through here and look at what Becker is saying, is that, well, you've got income tax law and basically income net operating loss carrybacks, right? That doesn't apply to this situation. But over here, you have operating loss carry forwards. If an operating loss is carried forward, the tax effects are recognized to the extent that the tax benefit is more likely than not to be realized, right? So in this situation here, right, basically they expect to return to profitability, right? Because there's a positive expectation, right? So basically it says net operating loss carry forward should be valued using the enacted future tax rate for the periods they're expected to be used. Tax credit carry forwards should be valued at the amount of the tax payable to be offset in the future. So for example, a current net operating loss of 100,000 is carry forward to be used in a period for which the current enacted tax rate is 21%. So this is what's really interesting. So if we look at this here, we're debiting deferred tax asset, right? That is exactly the same one over here, right? But what we're going through and doing is we're crediting a tax benefit. And what this is really important is it says this is a reduction of the book loss, not a contra expense, right? So is this the same as income tax expense? Maybe, but it's, again, we're going here. This is how Becker is going through and doing it. Not saying that Becker is more correct than Wiley, but as we're all going to be taking the CPA exam someday, I would probably be looking at Becker. So for this particular question. So over here, you see this, we're crediting, basically this is a reduction of the book loss, not a contra expense. The deferred tax asset will reduce a tax payable in a future period. That's absolutely correct. The tax benefit would reduce the net operating loss of the current period. So what you're assuming is, well, you have a net operating loss of 100,000. So the new net operating loss with this tax benefit, it would now be at 79,000 instead of being at 100,000. So this is how they're kind of going through and looking at this one over here for Becker. So I want to apologize to my viewer, right? So if we were to go through and do this the Wiley way, right? So the Wiley would come over here. So Wiley would come over here. They would debit deferred tax asset, and they would be going over here and crediting income tax expense. And to record benefit of an NOL carry forward. Okay, now under Becker, right? So if we were going by the Becker method over here, we would basically be saying 12/31/25. We would have deferred tax asset, right, over here for 100 grand. However, for the credit portion of this, again, this is really because Becker is saying over here, and again, they're very, very well researched, these review courses, is they're basically calling this a tax benefit. This is a reduction of a book loss, not a contra expense. So you're basically going to call this some sort of a tax benefit, right? And this is basically, we would say, again, this is going to reduce the net operating loss. Okay. Okay, so again, so when we go through and we look at these different examples, right? So there's not one proper answer, although I do like the way that Becker is explaining this better, because you're not really reducing an expense. You're basically just going to be reducing the amount of the net operating loss. It's not a contra expense account. So I do believe that Becker is probably correct. However, if your teacher is giving you expenses or giving you questions out of that Wiley test bank, you probably want to do it the Wiley way, right? So just depends on who you have as your instructor and what they're expecting. I think it's a great question to ask to your instructor in the classroom in terms of what they call it. I agree with this in terms of what Becker is going through and doing. So yeah, there you go. Now, just to kind of make sure is that, so we all know this, right? I'm always not going to be 100% correct. Wiley is not always going to be 100% correct. Becker, I haven't seen him miss anything, but there might be some things that they teach on the CPA exam that may not have like direct practical experience because it's the way that the CPA exam goes through and does things. But again, it's important to kind of go through and remember as you're going through and doing these questions that to really kind of question everything. And it might, when you get into topics like this in terms of intermediate accounting, this is why it's intermediate accounting. We're exploring these issues a little bit more. But that's kind of the thought process behind this. So again, I want to thank my viewer today for asking the question about doing this brief exercise, which actually turned out to be a little bit longer of an exercise, but it's actually because the way that this is being done is something that, we'll call it controversial, but there's just more than one way to go through and do it. So in any event, I want to thank you for joining me here today. Please make sure to like and subscribe to the channel. Look forward to seeing you on future videos. Have a great rest of your day. Have a good one.